Hey, what's up guys, it's Jonathan here, back with another public stock portfolio update. So as usual, we're going to do a quick recap of the market this week. We're going to do a quick recap of the moves that were made in the public account this week. We'll do a quick recap of how the account's doing overall. Then I'll give you an update on the AMC challenge, and we'll talk about important things to watch out for in the market in the near future. So if this video provides any value, please consider hitting the like and subscribe button. They both greatly help out the channel and they help push this video out to as many people as possible. So let's get right into it. So the market this week took a pretty bumpy ride. So on Monday, we opened with a strong downturn for the first half of the trading day. And eventually the market did flatten out for the rest of the day. It did start to fall into the last hour of trading. This movement to the downside continued for the first half of Tuesday as well. And this downward movement that we saw on Monday and Tuesday was mostly due to nervousness surrounding the FOMC meeting. But we'll talk more about that later on in this video. So later in the day on Tuesday, the market rebounded and made up for most of the losses from earlier on in the day. Then on Wednesday, the market was on an up and down ride, but overall it was flat heading into the FOMC meeting. But after the FOMC press release came out around 11 p.m. Pacific Standard Time, we saw the market run for the rest of the day. Then on Thursday, the market basically fell the entire day. It's unclear why this happened. It may have just been a reaction to the run that we saw late in the day on Wednesday, just the market correcting itself. Or it could have been because of the upcoming fear of quadruple riching, which happened on Friday. Friday was a bit of a roller coaster ride. The market was up and down throughout the day, but ended flat. But overall for the week, the S&P 500 was down about 2.2%. So to give you a recap of the moves that we made in the public account, like last week, this week was a busy week, and it was much busier than it was last week. And as always, if you guys want to see these trades being made live, check out the link in the description for public, where if you sign up using that link, you get free stock up to $70. So we made so many moves in this account this week that I really can't go in depth into all of them, or we'll be here forever. So if you have any questions about some of the moves that we made, you can either leave them in the comment section down below, or you can check out our free Discord that we have in the description below. So on Tuesday, we bought some Enphase, and we bought $1 worth of Enphase at $201.71 per share. Then we also bought some Cloudflare as well, and we bought $2 of Cloudflare at $136.46 per share. We also bought some Google, and we bought $2 of Google at $2,857.06 per share. So on Wednesday was the big buy day for me. I spent all the cash in this account on that day, which I believe was about $40. So before the FOMC press release on Wednesday, I bought some Nvidia, some Tesla, some Enphase, Matterport, bought a little bit more Cloudflare. Also, I tax loss harvest on Bitcoin and tax loss harvest on Ethereum. So I'm not 100% sure about this, so I would say check with a CPA. But from the way I understand tax law, typically when it comes to stocks, for you to be able to realize a loss on a stock, you usually can't buy the stock 30 days before or after you sell this position. And that's called the wash sell rule. But the wash sell rule doesn't apply to cryptocurrencies. So anytime I have a significant loss on cryptocurrencies, I'll usually go and sell it and I'll go and immediately rebuy it. So that way I can realize that loss. Now, again, this is something else you might want to check with a CPA, is that this year there's no wash sell rule on crypto, but next year they are planning on implementing one. So that's something to keep in mind. After the FOMC meeting, we went ahead and we bought even more Tesla. We bought some more Enphase, we bought some more Google, and we also bought some Trade Desk as well. And in total, we spent about $40 on all of this trade-in. But most of it was spent before the meeting, not after. So let's go into the iPad. I'll show you how the account looks now. So currently the portfolio sits at $137.17. And right now the biggest position we have is in Enphase Energy. And currently we're up almost 15% on this position, and makes up a little under 20% of the portfolio. The next position we have is Robinhood, and currently our Robinhood position is down 36% and makes up about 17% of the portfolio. Then we have Tesla here. It's up about 12%. It makes up about 17% of the portfolio. Then we also have some Google as well that we did add on to this week. It's currently down 0.75% and makes up about 12% of the portfolio. Then we have some Disney here. It's currently down 6% and makes up about 5.5% of the portfolio. Then we have some Matterport as well. Currently our Matterport position is up 5% and makes up about 4% of the portfolio. Then we have some Etsy. Currently our Etsy position is down 1.1% and it makes up about 3.5% of the portfolio. Next position we have here is Amazon. Amazon is currently down a little over 1.5% and makes up about 3.5% of the portfolio. The next position we have here is Nvidia. Nvidia is currently down almost 11% and makes up about 3.25% of the portfolio. The next position we have here is Palantire, and currently our position in Palantire is currently down a little over 15% of the portfolio. It makes up about 3% of the portfolio. The next position we have here is Cloudflare, and currently our Cloudflare position is down about a third and makes up about almost 3% of the portfolio. The next position we have here is Redfin, and our Redfin position is down 17%. It currently makes up almost 2.5% of the portfolio. The next position we have here is Ether, and our Ether position currently is up 4%. It makes up about 2.25% of the portfolio. The next position we have here is Trade Desk, and our Trade Desk position is up 2% and makes up 2.25% of our portfolio. The next position we have here is Bitcoin. Currently our Bitcoin position is down a little under 1% and makes up about 2% of the portfolio. Quick update of the AMC challenge. Currently AMC is sitting at $29.36 per share. So that means that we're down about 20% or about $30.56. And this week we got a solid rebound on it of about 10% compared to last week. So important things to watch out for. So when it comes to Congress, both the Senate and the House is off until the new year. But before they took time off, they did pass the debt ceiling bill on Wednesday. And I believe that the president signed it on Thursday. And this debt ceiling bill will provide coverage until 2023. And this is very interesting because there's a strong belief that the Republicans will most likely take power of the Senate again, if not the House as well. And if that's the case, that means they're the ones who are going to have to pass the debt ceiling bill by themselves. This could be a really interesting conversation in October when this deadline does become due again. So when it comes to the Fed, like I mentioned earlier, the Fed did conclude its FOMC meeting on Wednesday. And they announced that they do plan on speeding up the tapering. But they didn't highlight how much faster they plan on speeding it up. But according to Citigroup's estimates, they believe that the Fed will double their taper rate from $15 billion a month to $30 billion a month. And that they'll end the taper somewhere around end of March. The Fed also did project that they do plan on increasing rates 3 times in 2022. This is a pretty stark difference from what they said at the last FOMC meeting where they said they're only going to raise rates once. But the market was anticipating this, so this didn't really come too much of a shock to anyone. And these moves of increasing the speed of the taper and more rate hikes in 2022 shows that the Fed is moving away from the thinking that inflation is transitory to a position that's more actively fighting inflation. So when it comes to Omicron, like I mentioned last week, so far all US cases of Omicron have not led to any reported deaths. But recently there's been some worrisome news coming from the UK talking about the rate of transmission of Omicron. And apparently the rate of Omicron in the UK has tripled in the past week. And also around the world, there has been governments that have started to implement more lockdown restrictions. And more lockdowns can certainly cause more economic pain to the markets. And that's some of the reason why we saw the market fall on Thursday and Friday, because the media focus started to move away from the FOMC meeting and started to focus more on Omicron. So we definitely want to track the progress of Omicron and make sure that that doesn't become too big of an issue. But outside of Omicron, there isn't really too many major negative catalysts for the market in the short term. So in my opinion, I think that the market's going to do well going into the new year, as long as we don't get any surprises from Omicron. So that's basically all I have for you guys this week. Thank you guys so much for watching. If you made it this far, I'm pretty sure you want to like and subscribe to this video. Apparently, I was looking at my analytics the other day and it says about 85% of you guys are not subscribed to my channel. So if you made it through the entire video, you'll probably like the other videos I post as well. Also, let me know what you guys think in the comment section down below about the market. Do you think there's any catalyst that I might be missing? Let me know in the comments. I'd love to hear from you guys. Check out all my social medias. I'm trying to post there every day now, so if you are interested in seeing some extra content from me, check me out on those platforms. Thank you so much for watching, and I'll see you in the next video.